This is the incredible story of how John turned $500 into $50,000 using nothing but index funds. Please subscribe to get more video like this. John was a young man that worked a full-time job and had very little disposable income, but he was smart, disciplined, and most importantly, he was patient. He started investing at the age of 25 and began with just $500. He didn't have enough money to invest in individual stocks, so instead he bought shares of an S&P 500 index fund. An index fund is basically a basket of stocks that tracks the performance of a specific market. In this case, it was the S&P 500, which is an index of the 500 largest companies in the United States. He understood that investing in an index fund was a great way to diversify his money across many different companies and sectors, which can help reduce risk and increase the potential for long-term growth. So he decided to invest his $500 in this fund, and then continue investing every month by buying more shares of the same index fund. This is called dollar cost averaging. By investing a fixed amount of money at regular intervals, regardless of the share price, he was able to buy more shares when the market was down and fewer shares when the market was up, which is a powerful strategy to reduce the average cost per share and potentially increase profits. But even though he was investing consistently, John wasn't getting rich quickly. In fact, during the first few years, his investment didn't even double. That's because the stock market was relatively flat during that time period. However, John didn't panic and sell his investments. He knew that the stock market had historically gone up in value over the long term, and he was patient enough to wait for his investments to grow. And then something amazing happened. The power of compounding began to work its magic. Compounding is the idea that once an investment starts making money, that money can be reinvested to make even more money, which makes even more money, and so on in a snowball effect. For example, if John got a 10 return on his investment, then he would have made $50. If he reinvested that $50, he would have made another $5, which means he would have made a total of $55. And if he reinvested that $55, he would have made another $6, and so on. So basically, the more money he made, the more money he kept making without having to do anything else. On top of that, the index fund he was invested in paid him dividends every quarter. Dividends are basically a portion of the company's profits that are distributed to shareholders. So not only was John earning money through capital gains, which is the increase in the value of his investment over time, but he was also earning money through dividends, which were paid out to him every quarter. Years went by and John kept investing, even though the stock market had its ups and downs. He didn't panic and sell like some investors do when they see their investment account drop in value. Instead, he continued buying shares of the index fund every month, knowing that the market would eventually recover. Then one day he checked his account and noticed that his $500 had grown to $50,000. It was unbelievable. He couldn't believe that his small investment had grown so much over the years, but it was true. His patience, discipline, and consistency had paid off. The moral of the story is that investing in index funds can be a great way to grow your wealth over time. It doesn't require a lot of money to start, and the potential for long-term growth is huge. Just like John, you need to be patient and consistent with your investments and avoid the temptation to day trade or try to time the market. That's because day trading is extremely risky and has a very high failure rate. Most day traders actually lose money, so it's best to avoid it if you want to be a successful investor. Instead, focus on buying and holding long-term investments that have a proven track record of growth. And don't forget to reinvest your dividends and earnings back into your investments. That's how you can make your money work for you and grow your wealth over time.